Hey everyone, Angus here. I just thought I'd make a very quick video on how I sometimes time my entries and exits into stocks. I like to buy stocks that have a good upward momentum, and so on that basis, sometimes the stocks that I buy, they don't have very clearly defined support and resistance type areas. So, I'll use a few different tools to, try and identify areas of resistance and support, and then I'll place my orders to try and, get the best value that I can for that particular stock. So 5GN is just purely an example of a stock that I, typically like to trade. It's got that nice left to right upward sloping momentum. And then what I'll do is, if I was looking at this traditionally using support and resistance type areas, I might put a line around here, and I've got that as a green line, and I'd call that my support area. It's a fairly strong support. You can see that in the past it was resistance, so share price came up to here, and there's nothing in the past, so the stock has never sort of been at this type of levels. So there's nothing sort of really historically back here that I can go and look at to get some sort of insights. And again, big believer in using support and resistance to try and help you with your charting. So you can see here, it's previously been a resistance area. So, hit that, it bounced off, it sort of came back up a little bit, didn't go anywhere, tried again, didn't go anywhere. And on the sort of third time, it pushed through with a bit of volume down here. And you can see that it then switched to using this line as, support. So that line that was previously resistance now becomes support. And you can see the stock has sort of trailed along it for a little bit. It's moved up, it's come back down, it's hit it, bounced off it, come back down, hit it, bounced off. And now it's sort of really broken through that previous area, and it's continuing to run, hopefully. So too many alerts. And so it's going to continue to run. The only catch though is that this area here is now a fair way below my existing price. And so what I'll do is I'll kind of cheat and say, well, this sort of area here that was, sort of very basic, I guess, resistance, hit there and bounced off. But, to normally put in a resistance or a support point, you want the line to, or you want the price to have touched it a few times and tested it, whereas this one has just gone straight through it. So this area here, I would argue might be my new support at $1.46. And you can kind of see that if you click on the 15-minute time frame and you move right in, you can see that the share is well and truly above it. And if you wanted to even move that line up, if you wanted to run a much tighter stop, maybe around this $1.53 type mark is a good area. You could put it up a little bit higher here, because you can see that arguably 1, 2, 3, maybe sort of around here it's come back down and tried to nudge it. But if you sort of put your support up here where you can see it really clearly, it's come down a few times to touch that $1.56 type mark. You might get stopped out when people go stop hunting, or when the share gap's down, or one of the little algo bots messes around with it a bit. So I would probably leave my stop somewhere down around here, maybe below this candle, possibly even where the little gap is, somewhere down around here, just to leave myself in that trade for as long as I can. And if you look at a daily chart, back to where we were, you can see that it's not too far off where the price is at the moment. So that's just another way of looking at it. Some people like to draw diagonal support and resistance type points. So I like to let the computer draw my points for me. So rather than me sitting here and going, I think that might be a ray, so that might not work. Yeah, no, that's not the right one. But some people will draw trend lines sort of along here and say, well, it's going that way and then it's going that way, and then that gives them sort of more of an idea of whether stocks continue to trend or breaking down. But what I like to use is a linear regression tool. So if you go to your toolbar, you go right down the bottom, there's a regression trend. And what I like to do is I'll say, well, where did the trend start roughly? You can say that here's probably where it started moving up more aggressively. So I'll start there and I'll move up to here, the top of that little area there where the price was the highest. I might try and move him up a bit just to make sure he's up at the top of that. And you can see here that what it does is it automatically maps out this area, and I can then double click on it. I can get rid of the Pearson's R. I can put in the extend lines. I can do things like because it's probably a little bit dark, it's hiding some of my candles. I can lighten it up a bit. Might make it like that, and I might make this one like this. I'll go okay, and I'll go okay. And so you can see here, or I might even see how it's broken out a few times, like it's sort of gone outside these little, tram lines. So what I might do is I might go inputs. I might make, I don't know if I can do decimal points. I've never tried decimal points, but I'll do 2.5 and 2.5. Normally I've just made it 3. And so you can see here, yeah, I might make it 3. Let's make it 3 and 3. And that didn't work, sorry. Double click. Make it -3 was my mistake. So -3. And you can see here the stock, sort of sits and travels along this middle line fairly reliably, which is what you want. But, when it has these fairly big movements, you can see it sort of comes to the bottom of this line and then eventually makes its way back up, comes back down, makes its way back up. And so you could be fairly safe to think that, at the moment this stock is more than likely at some stage going to start to travel back. So even though you've got your, arguably your, horizontal support and resistance, often you'll find that stocks do break down through those. So if I'd had a, sort of a support area here that I thought was a support area, you can see it would have broken down below it. And so I'd be more inclined to think, well, maybe the stock's going to travel this way, and so it might come back down at some stage to, that $1.30 type mark, depending on how it runs and how deep it runs, and then it'll probably move back up to that, dollar, I don't know, $1.75 type mark, somewhere around here, $1.77, if it continues to trend. So it's just another way of looking at, getting the computer to assist you with drawing lines on a chart for support and resistance. If I get rid of that, another thing that I'll sometimes look at is I'll click on my Bollinger Band indicators. And so you can see here, the stock's been doing, what's kind of called an upper Bollinger Band walk, where it's, very much sitting in this top of this line here. It hasn't broken down through the middle Bollinger Band, which is always a good sign. It sort of broke out a little bit through here, but recovered very quickly. So again, you can see that, the stock's running quite well. And as long as it stays above this middle line, I'd feel comfortable hanging on to it. So, Bollinger Bands is another way that you can look at the stock just to, try and find out which way it's heading and, where you may or may not put support and resistance type levels. For me personally, I like to use trailing stops. And a way that I'll often, identify what my trailing stop should be is I'll go back to my simple chart. I'll go back and plug back in my linear regression line, and I'll say make it from this point here. Let's do it properly. Let's go back to wherever it sort of started, roughly around here, move it up to around here. And so you can see that, that's the sort of range that this stock is roughly trading in. And if I get my little range guide, I can sort of click at the top of it roughly, and I can click at the bottom of it roughly. And I can see that I would have had to have a stop loss around about 25% to have kept this stock all the way through this trade. And it's fairly easy to work that out, because all you do, if you're running something like a trailing stop, trailing stop goes from the highest point, since after you bought the stock, goes from the highest point down to the lowest point, and then goes back up to the highest point, and it'll stay at this 10% or 15% below this level here until it makes a new high. So if I looked at from this area here, this price point here, down to the bottom of this candle here, which was kind of the lowest point, you can see that that would have needed a 20% stop to keep me in the trade from that point there to that point there. And I can check it up here again. I can go to the top of my price point up here. I can look at that up there. I can go down to the lowest point, which is roughly down here. And so again, you can see that I would have needed roughly a 25% trailing sell to keep me in that trade, while it was going through this significant amount of volatility. And, the honest answer is what I would have done is I typically run a 10% stop. So I probably would have got out, if I made that 10%, I would have got out somewhere around about, this level here, probably would have sold it there, stayed out of the trade, and then come back in after it had a few positive days. And so I probably would have bought back in somewhere around here. I would have gone from there, up to, pretend up around here where it broke down again. And so you can see there was a 20% trade in that. So that's not a bad trade. In fact, I would have probably stayed in that because it was kept going up, kept going up, kept going up. And I would have stayed in it probably up until around here. So I would have made, roughly 42% out of that trade. And then when it broke down here, I would have got back out again at around 10%. So, from this high here, down to, let's say, 10%, I would have got out roughly around here. And I'm guessing that I would have saved, going down another 10%. Then I would have bought back in around here. I probably would have bought, back after this candle here. You can see, because I would have looked at this and would have said, well, that's at the bottom of my range. And so from here, I would have bought back in because I said, well, that's, it's a green sign, so it's more than likely going to go back up. It was red here, it turned green here, red here, turned green here. And so history repeats itself. So I would have bought back in, and, somewhere around this green candle, let's say I've got in the middle of the candle, and I would have ridden it all the way up to the top here. And so I would have made another, 40% roughly, very roughly. And then I'll, have my stop that might get me out somewhere around here, at some stage before I buy back in. So I just thought I'd show you that's just another way that I might, look at a stock and when there's, one of these stocks where there's not that obvious support and resistance type areas, and, you use very basic indicators. It's just another way of looking at, how do I stay in this stock without necessarily using traditional support and resistance levels, because a stock like this has quite a bit of variation in it, and I prefer to use that linear regression type line to set my levels and set my entries and exits rather than the traditional horizontal support and resistance. If a stock's sort of going sideways, then it's much easier to look at those support and resistance type levels, but when it's a stock that's making new highs, especially new 52-week highs, then I like to run on the linear regression. And you can see too, just very quickly, like if I'd changed it and bought into this stock earlier, and let's say I'd bought in around this period here and I kept it to around this period here, you can see that the swing certainly wasn't as much, like it wasn't anywhere near as volatile a stock through this period here. And we can check that by going from the top line down to the bottom. It's still quite a lot, so it surprises me. So it's still roughly a 20% stock even down here. I thought it might have been less than that. I look for stocks where it might be a, I honestly try and look for stocks where it's probably a 10 to 15% type swing. Just a little bit better on the nerves, but this one even down here is still got a lot of variation in it. So, then when you get up here, it's even more volatile. So it's interesting. So it turns into something like a 25% variation up here. Let's go back up. Yeah, and so, it's a more volatile stock. But anyway, as I said, I just thought I'd share that just in case it helps anyone. And again, like I like to try and trade as mechanically as I can. I rather than drawing lines that, sort of go where I want them to go, I do like the computer to try and draw the lines and leverage that technology as much as I can. Anyway, I hope that was useful.